Is the sell-off of tech stocks over? Can Crown survive the Royal Commission and the Fink? And Woolworths and Medibank, why it pays to buy the market leader. I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money.
Well, Paul, tech stocks have been really popular since the crash of the stock market, even before then, but they've really surged. But now they've been given a bit of a come up, but it's all over this selling off.
Yeah, a bit of a caning until last night when we saw in the US, Peter, a bit of a rebound. The tech stocks like Tesla were down about 9%, finished down about 2%, a bit of a rebound. Look, they're saying it's all to do with bond rates. I'm not sure I quite buy that. I mean, I think they've had such a great run.
Yeah.
Markets rotate, as we know. Sure, look, there's fear about inflation. We're seeing higher commodity prices, but I think this is more about weakness in the US dollar long term, and markets with a lot of profits, and you can't keep on. The thing about big tech as well is invariably it's going to be, some parts of it are going to be broken up, right?
Yeah.
And I think people can see that as well. So they're worried about that sort of the regulatory risk. I think, particularly with some of the big tech companies.
Yeah. But also, Paul, the share prices have absolutely rocketed into unbelievable levels. Tesla's a case in point. But let's explain just quickly. If the US bond market is saying interest rates are on the rise, eventually that will slow down the US economy. But it's so far out there. It's got to grow fast first before the interest rates start working. So they're kind of jumping at shadows.
They are jumping shadows. I mean, clearly, commodity prices are on the way up. We've seen big increases, not just in oil, but copper's over $4 a pound.
Yeah.
So just look at the whole commodity markets going higher. Yeah. So that's what's sort of fueling the inflation fear. But it's still a long, long way out for that to actually happen. Yeah. Look, I always felt the yield curve was going to steepen. It's been steepening now for the best part of 6
rates are rising.
Yep. Yeah, and short-term rates stay where they are. Long-term rates go up, and that's because they can't basically go any lower, right?
Sure, exactly
so when they can't go any lower, the market says they've got to go up at some stage, either because of inflation or, as is happening in the US, because the US Federal Reserve is just pumping money out and Biden's spending like there's no tomorrow.
There is no tomorrow.
The US dollar is losing value, and that's why interest rates have to go up, because people have less confidence in US bonds.
Let's throw one little thing in. The smarties who've made a lot of money out of Tesla then sell it at the top, let it drop 5, 10, 12%, and they buy it again. Yeah. That's what they do.
So I don't think tech is over. Look, remember, our tech is not the same. We're just playing catch up.
We're little tech.
We're little tech, right? But look, it got very fully priced. We're in a rotation. Yeah. We'll probably see a bit more of a rotation, but as you say, the smart money will just come back in there again and look for the next leg up.
I think the bell ringer's gone to sleep.
Yep.
Okay. All right. Let's go.
I'm not sure we really answered that very well, but it's worth
talking
about.
Brilliant. Brilliant.
Oh, brilliant.
Okay. So now Crown has to face the Fink. Ray Finkelstein, what a nasty name for a respected judge. The Fink.
This can't be good for Crown, right? Doesn't matter how you call it. We've seen what Royal Commissions do, right? They are painful, right?
And he's a tough judge too.
When you get a tough judge doing it, there cannot be any good news. Now, Crown might survive, but in what form and under what conditions? And whether there's a separation of the gaming from the the restaurants and the resort part, who knows? I mean, I think I'm surprised the share price is sort of going to hang in there, Peter. I can't see.
Well, one thing we've seen in America, casino share prices are going up because they're reopening trades. You've got some reason for Crown's share price to go, and reason for it to go down. But you're right. I think the overall impact of a Royal Commission is going to really hurt this brand. And look, ultimately, Paul, Crown will survive. It'll be totally different management. The board will go and they'll start doing casino gambling the honest way, which probably won't be great for profits, but some investors who would never touch it because they thought it was all criminal might go into it. So I think Crown's share price ultimately will go up, but it'll go down first.
Okay, here's another one to throw in. Well, if you're a bit of a risk taker and you like a higher interest rate, Crown has got some subordinated notes. So these are interest-bearing securities. Yeah. Got no maturity date. They trade under the code of CWNHB. Yeah. Okay, they pay 4% over the bank bill rate. And they're currently trading about $92, $92.75 versus a par value of 100. So the effective return is about 6% or something, right? Thrill seekers, have a look at that. I'm not saying that's a great investment for most people. I actually own some. Not sure I'm buying any more, but if you want a high return, there's something to have a look at. And you're a believer in the Crown business, I think it's going to do it tough, Peter. So I think it's going to impact these securities. But you know, that's what makes a market.
Paul had a lot more hair before he bought those securities. And finally, did the bell go off?
It did go off. We almost did.
Yes, we did. Yep. Okay, and finally, this is a story you always say, buy the market leader, Paul.
Yep.
Woolworths and Medibank tells a story.
Woolworths result out today, pretty good. Market's going to like it. It's probably pretty much as expected. But
unlike Coles,
but the key thing is it continues to cream Coles, right? The last quarter was same store sales. It outperformed Coles by about 2%. Even in the first 7 weeks of the year, in January, February, it's outperformed Coles again. The Williker business, Dan Murphy's killing the Coles business.
I bet your Big W's improving too.
Yeah, and look, so it's another story about why it pays to back number one. Now, it trades at a more expensive premium to Coles, but time after time we see that the number ones do better than the number two. So that's Woolworths does better than Coles, Commonwealth Bank does better than NAB and ANZ and Westpac, Afterpay does better than Zip. You know, if you're going to, Domain, REA does so much better than Domain. Yeah. Look at the market and there's a premium for number
Bunnings
ones.
Versus Mitre 10.
And they deserve the price. Medibank also reported today, look, it's pretty good as well. It's actually had growth in its main brand, the main Medibank brand. It's the market leader in health insurance, and has actually achieved growth. The bad news is Craig Drummond's going to retire at the end of June. He's done a fantastic job with Medibank, but that's a strong result as well today. So look, reporting season winds down. We've got 2 days to go. Overall, it's been pretty good. Dividends are up, but consumer-facing stocks have done well. The weakness area, coming back to where we started this, Peter, is tech has been a little disappointing.
Yeah. But then again, when the price goes down, that becomes a buying opportunity for the really good ones, e.g. CSL and Xero. I'm Peter Switzer.
I'm Paul Rickard. We're mad about money.